Welcome to Hargreaves Lansdown's Meet the Manager. I'm Joseph Hill, and today I'm joined by Tom Slater, co-manager of the Baillie Gifford American Fund, which features on our wealth shortlist of funds selected for their performance potential. So Tom, the fund can invest across the vast US stock market, the biggest stock market in the world, where there's so many opportunities. So what are you seeing in the market at the moment?
I think you're right. There are so many opportunities, but there are some big areas that really inform a lot of our thinking. Some of them have been growth areas for a while now. So think about the digitization of commerce. Now, it's become increasingly easy to buy products online. You go to your Instagram feed, you see a product that you like, 2 clicks, powered by Shopify. You have this really smooth checkout experience, and then Amazon will show up the next day with your parcel. And so I think that ease is we're continuing to see this trend of commerce moving online onto mobile devices. But you're also seeing new categories come online. So beauty is an example. You've seen the beauty industry start selling their products online, but they haven't really ever been digital first companies. But we own Oddity, for example, which starts out as an online company. You can't go to a physical store and buy their products, and they're doing really well. So that's one long-established one. I'd pick out in the same vein the way advertising is changing. So if you look at the way that advertising has changed online, it's been a huge growth industry. But the way we consume video is changing not just online but everywhere. So we're watching broadcast television less and less. We're much more likely to stream things. And that means that the model of advertising that you've seen online is now moving to the living room. And that's a vast market. So there's lots of opportunities, companies like the Trade Desk that tap into that. But then there are some other areas where we haven't seen that type of dramatic change, where I think we're starting to see real opportunities. Healthcare would be an example there, where just the lead times are longer because it takes so much time to get approval for a new drug. But if you look at the tools that are now available to scientists, the depth of understanding that we're getting about the genetic and molecular nature of disease, so that throws up opportunities. But healthcare is also changing. So the population is aging. They have different needs. There are companies that are grasping that opportunity to provide services. And then maybe a final one, transport. We've seen that we're increasingly moving towards electric vehicles, but we're also increasingly moving towards autonomous vehicles. And it's actually quite hard to see that on the UK's roads, and that's partly regulatory constraints. But if you go and try full self-driving in a Tesla on US roads today, it's a really pretty amazing experience. Or we own Aurora Innovation. They're building autonomous trucks. So big 16-wheelers, they're launching commercially in the new year. So this technology that's been spoken about for a long time is really just on the cusp of becoming mainstream.
And the fund's got a growth-focused investment style. So when you find an exciting idea, you invest and try and hold it for the long term to benefit from the compounding of that growth. But it can come with volatility. So how does that style and the opportunities you identified influence how you invest in the fund?
So in the long run, we believe that share prices follow earnings, so the profits of companies. And therefore, we're looking for companies that have the opportunity to grow their earnings and their profits very substantially. And the good news is that the US is a great place to go looking for these companies. I think the caliber of entrepreneurs that you find there, both homegrown and immigrant, but also the ability that they have to scale those businesses, not just to come up with a new idea, but really grow it into something substantial. And they're aided by what's happened in the world of technology over the past 10 or 20 years to actually go global and build really big businesses. So we don't have a European equivalent of Facebook. We don't have a European equivalent of Amazon. NVIDIA, who make the chips that are necessary for AI, have a global opportunity. And so that's really important because in my experience, stock markets are driven by a really small number of exceptional companies. And the big ones that we've seen have come from the US. And I think that's a really important contributor to why the US market has done so much better than other stock markets. It's the outsized influence of those exceptional companies. For us, what we're looking to do is find companies that have that potential and be really long-term patient owners. We don't try to trade in and out based on quarterly news flow or small fluctuations in valuation. And we don't want to dilute the impact of that small number of exceptional companies. So we only own around 40 stocks. The portfolio looks very different to the broader market. And as your question implies, you get volatility from that. We believe that this is the best approach for delivering long-term returns to our fund holders, but there's a price, which is that you get volatility in the short run. And so, as an investor, if you can't tolerate that volatility, seeing the fluctuations in the price of the fund, then Baillie Gifford American probably isn't for you.
And reflecting on your career so far, Tom, what top investment tip have you learned along the way that perhaps you wish you'd known at the start?
So when I started, people would say to me, look, you're going to get investments wrong in this job, but what matters is that you're right more often than you're wrong. But for me, actually, that hasn't been the right advice. Instead, what matters is how much you make when you're right and how much you lose when you're wrong. Because over the long run, you get this massive difference in impact from good decisions that can go up many times and bad decisions where you can only lose just the original investment stake.
And who would you say has had the biggest influence on your investment approach?
Well, I find this question quite difficult because I strongly believe in investment that it's about being your own person, understanding yourself, understanding your own strengths and weaknesses. And it's really important to get a wide range of inputs and listen to people who have done a good job of investing. But then really think about how that applies to you. Now, if you push me, I would say the biggest influences have been Baillie Gifford partners, past and present. I've been at the firm for nearly 25 years. I've had the opportunity to work with some exceptional investors. I learn from my co-managers on the fund every day.
And outside of work, how do you switch off?
Aside from refereeing the almost perpetual arguments between my 3 children, I have a very naughty Hungarian Vizsla called Willa, and she and I spend a lot of time running in the hills together.
Thanks for joining us, Tom.
Thank you.